Randgold Resources increased its profit from mining by 5% to $143.9 million. This is for the quarter to 31st of March 2015. Joining me on the line from London is Mark Bristow. He's the Chief Executive of Randgold. Thank you so much for making the time. We did see that on a quarter-on-quarter basis, it does look promising. But if we are looking at profit from your mining activity for the comparable period, Mark, and we also look at the profit for that particular period, we are seeing a substantial decline. Can you maybe just give us some color as to why we saw such a sharp decline, and taking into account that if you look at it on a comparable basis, the gold price, it hadn't fallen that much?
Yeah, the gold price is down about $80, Tamisha. Good morning. But profitability, you can't expect us to have record quarters every quarter, but a solid quarter nevertheless. And I think you need to put these results, which are, profitable on a bottom line basis after depreciation and amortization. And that's something that's just very rare in the gold industry. And on top of that, the other measure that we've guided the market to is the growth in net cash. So we grew our cash by 71%. And we have no debt. So, that's a very strong position to be in an industry where everyone is really stressed and dealing with loss-making corporations.
Obviously, you've got cash in hand, and looking at your exploration, that is also very key to what you do. Let's just talk about that in terms of how much you have put aside and where we can most likely see you in terms of your footprint.
Tamisha, that's a great question to ask this quarter, because we announced our first significant exploration target for many years this morning, called Fonondara. It's in the north central Côte d'Ivoire, Ivory Coast in English, and about 70 kilometers west of Tongon. It's an early stage project, but delivering some very significant grades and widths. And we've been able to trace it over more than 2.2 kilometers, that's the mineralization, and the structure itself over 25 kilometers. So we've just announced that we've mobilized the drilling rigs to do a preliminary evaluation of this target, but it is a significant target. It certainly stacks up to the other 5 significant discoveries we've made over the last 20 years at this time, at this point in the evolution of the project. But the key is to wait for the drill results. So that's really going to be the focus for our evaluation team in the next couple of quarters.
Mark, thank you so much for joining us this afternoon. That was Mark Bristow. He's the Chief Executive of Randgold Resources. I will now move from resources to the property sector. And with me, we've got Redefine's results for the 6 months ending at the 28th of February 2015. I have with me Redefine Chief Executive Andrew Koenig. Thank you so much, Andrew, for your time. Andrew, just looking at your results, what really did strike me is that we're looking at the vacancies from your different sectors. Yes. We have seen those vacancies creeping up. Why is that?
Just thanks for having me on the show. Just to let you know, when we look at the business confidence index that was measured by the Bureau of Economic Research back in Q1, I think it was released mid-March, that sums up where we are when it comes to our vacancies, in that you are seeing a generally positive retail outlook in terms of that period, which is offset by a negative industrial or energy-reliant sector outlook in terms of business conditions. And that is essentially what's playing out in our vacancies. If you look at it, offices have been in some trouble for a prolonged period of time. And unfortunately, with the economic growth being sub 2%, the prospect of us making inroads into that vacancy is not going to happen. In fact, it's probably going to drift at these levels, if not worsen. And the current level of about 7.2% isn't that bad if one compares it to what has been announced by SAPOA, which is around 11%. Industrial has been reasonably okay, despite the load shedding headwinds that they face from a production point of view. But then we acquired quite a sizable portfolio in the Max Steel group, which to some extent has, if you like, diluted where vacancies are sitting at the moment. So if you knock the Max Steel portfolio out of those numbers, we probably did to some extent go backwards, and that's mainly as a result of the Ellerins Cato Ridge distribution facility that went vacant following their demise last year, August. Retail has held up. Yes, we've got a small vacancy there, but a lot of it is strategic in that we are keeping open areas that have gone vacant for redevelopment. So it's not to say that the retail sector has gone backwards. It's more a production-led decision that's resulted in those vacancies.
Andrew, we've heard from retailers and a lot of business people talking about what they're doing and how they're adapting to the current environment, particularly when we talk about load shedding. So we've seen the likes of ShopRite investing in generators. What role are you going to be playing here? Are you going to start making energy a contingency plan available to your residents or your tenants, and will you be factoring that in your escalations going forward?
The short answer is we are addressing the issue. It has got all of our minds focused on a solution, and what we are looking for is a total solution for 13 of our key retail properties. And by a total solution, it's fine for individual tenants to go out and do their own thing, but the difficulty is that when the centre is in darkness, even though your lights might be on, doesn't mean to say that the shopper is going to remain in your store. So what we are looking at doing is installing full generation capacity at 13 of our sites. That includes Fountainhead properties as well. It's a total capital outlay of about 200 million rand that we are undertaking to provide all shoppers, all tenants with uninterrupted power supply. Yes, we would like our tenants to contribute to that, but in the short term we will have to bear some of that capital cost, if you like. There will be a recovery that we will be proposing to our tenants, which will be a subject of negotiation, and then there will be a recovery of the operating costs of such diesel generated electricity. Just to bear in mind, the cost of diesel generated electricity is roughly 5 times that of Eskom's. So it is a costly exercise which both tenant and landlord will have to bear, given the need to remain fully operational despite load shedding.
So if we just did the bottom line means that when those contracts are being drawn up, the rent will be more?
It will. Unfortunately for us as landlords, we do have contractual arrangements in place. It's not that easy just to open up what already has been contractually agreed. So from a capital recovery point of view, there will be a process of negotiation with a view to amending existing leases. And clearly where new tenants come into our centres, it will be part of the standard lease going forward. So there will be an element of recovery from the tenant. But as I said, as landlord, being responsible, we will be taking the lead in this, and we won't be waiting for everybody to come on board.
You mentioned Fountainhead. Just tell us about timelines to get that particular deal wrapped up. And a lot of market analysts and participants are waiting because they're thinking that this could be the deal that could push Redefine into the top 40.
Absolutely. Fountainhead, as you know, it's now 3rd time lucky for us. But what we do have this time, which is different, is that if I look at the irrevocable undertakings that we have, plus the non-binding indications of support, it totals 50% of those voters who qualify to approve the transaction. Further to that, we have the support of the FSB, and more importantly, of the people that gave us the irrevocables, 4 of the largest institutions that voted against us last time have given us undertakings this time. So we are very confident it will proceed. At the moment, we're going through all the regulatory processes. The timeline suggests that we will be calling unit holder and shareholder meetings for both Fountainhead and Redefine respectively during July. And if approved, we look to implement the first week of August.
Okay, so 2 more months. And
absolutely.
Thank you so much, Andrew. That was the Redefine Chief Executive.